Hello everyone! Welcome to Financial Planning with Special Needs Hawaii. In this video, we will be going over some financial jargon that you might see from the financial world and what they mean. Before we get started, we want to remind everyone that any of the stocks and assets mentioned in this video are mentioned for educational purposes only and are not endorsements or solicitations. For more information, talk to a financial advisor who can help you to create a plan that fits your specific needs and goals. With that said, let us get started with the video. Here are the financial terms that we will cover in this video. Now, you have probably heard these terms used in the media, but you might not have understood exactly what they mean. This is understandable, since there are a lot of jargon used in the financial world. So, let us get started. Our first term in this video is return. In an article published by MarketWatch on June 8, 2020, titled Bull, Bear, and Now a New Bull Market, Here's What's Next, strategist says. They write, the team's underperformers were stocks in the top 20% of S&P 500 return year to date, yet which were in the bottom 20% since March 23rd. So, what is return? Return is the amount of gain or loss an investment may have through market fluctuations or through sales of the investment. Returns are always reported in percentage points, since they more accurately reflect changes in the price of the investment, and they can also be used to compare investment performance to each other. Whole numbers would not completely show how well your investment is performing. After all, saying that you made a $10 return on your investment does not mean anything. It would be a good return if you made this profit on a $50 investment, but not so good on a $1,000 investment. The next term we will be going over is risk. In another article from MarketWatch on June 8, 2020, titled Boeing Stock Jumps After Analyst Says Worst is Priced In, they write, there are risks ahead. However, absent another COVID-19 wave, we think the worst is now being priced in. So, what are risks? Risk is the chance that your investment will decrease in value. There are many reasons why any investment may lose value. In this quote, the major risk was the COVID-19 virus and how that would negatively affect Boeing. Risks can be classified into two general categories, systematic and unsystematic risk. Systematic risk is risk that will affect the entire stock market as a whole and isn't limited to a single company or industry. COVID-19 is an example of systematic risk, since it affected the entire market. Systematic risk is always present in investing. Unsystematic risk is risk that affects individual companies. If something bad happens to the company, it will not affect the entire market. If a company has bad earnings for a quarter, it won't cause a major downturn in the market. Next on our list of terms is points. In an article from US News titled Dow Drops 1,500 Points as Oil Price Plunge Shocks Markets, they write, the Dow Jones Industrial Average lost 1,582 points, or 6.1%, after briefly being down more than 2,000. So, what are points? Points represent a $1 change in a stock's price. In the quote, the value of the Dow Jones dropped 1,619 points, or $1,619. It is a counterpart of the previous term of return, where points represent a dollar change, while returns represent a percent change in the number. Our final term for this video is interest rates. In an article from MarketWatch titled, The Fed Dropped Interest Rates to 0%, What That Means for Your Credit Cards and Bank Accounts, they write, the Federal Reserve's decision to cut interest rates to zero isn't good news for savers or spenders. So what are interest rates? Everyone knows that interest rates are the charge for borrowing money. However, the interest rates generally talked about in media is the federal funds rates that banks use when lending each other money. This rate trickles down to all other borrowing activities. Interest rates are a large topic, and their effects on the market won't be discussed in this video. Let's review the financial terms we've gone over in this video. Return: the amount of gain or loss an investment may have expressed as a percentage. Risk: the chance that your investment will decrease in value. Points: the dollar change counterpart to return represents a $1 change in the price of a stock. Interest rates: the federal funds rate that banks use when lending each other money. It is a rate that affects all borrowing activities and also affects the market. Thanks for watching. We have more information on special needs planning topics and general financial planning topics on our website at specialneedshawaii.com. You can find our contact information and send us a message through there as well. Make sure to subscribe for future content on financial planning and special needs planning educational videos. We will see you in the next video.